Welcome to another episode of Market Money. I'm Jermaine McDonald, host, and let's get started. I have to say before I continue that the information that is reviewed here is for discussion, education, entertainment, and illustrative purposes only, and should not be construed as professional financial advice, solicitation, or recommendation to buy or sell any securities. So please be advised. This episode of Market Money is sponsored by our 12-month investment challenge. If you're brand new to investing and like to have a process or a system to get started, you're free to join us. We have 5 days of the challenge available on our YouTube channel for you to check out. If you want to take it a step further, you can join us for the monthly live sessions where we go over investment topics, concepts, strategies, etc., all with the aim to help you build momentum in your investing. So for today, we're going to be talking about earnings season. What does that mean for you as an investor? And then next, we're going to look at the earnings reports for 3 companies, 2 on the main market, 1 on the junior market. So it should be an interesting session. So let's start. So first, we're going to talk about earnings season, what that means for you as an investor. So you might have heard the term before, but the earnings season is pretty much a period of time which companies release their quarterly reports, right? So this is not an arbitrary thing. There are some rules that govern this process. So on the Jamaica Stock Exchange, companies are required to submit their unaudited financials within 45 days at the end of the quarter. So for example, we're at February 21st now, so we're seeing a lot of the reports for Q4 last year. Of course, that would depend on the timeline for that company's financial year, right? Not everybody will observe their financial year from January to December. Some are from February to January, and so on and so forth. So it really depends on that quarter for the company. But either way, you're going to likely be seeing reports within 45 days at the end of every quarter, right? Some companies might be outliers, but for the most part, that's what you will see. Their audited financials are within 60 or 90 days, depending on, again, what that company may be required to do. And you may see annual reports within 120 days at the end of the financial year. So these are some of the dates to bear in mind. So these reports are going to be released based on whatever timeline the company needs to meet based on the requirements of that exchange. Right, so in the US, it would actually be a shorter time span. For Jamaica, you're looking at these dates that you see here. So what does that mean for you as an investor? So really, the way I see it, it's an opportunity for you to take profit from your position. And that really depends on what is likely to happen for that company. And I say what is likely to happen because usually you're going to see movement in the stock price before the earnings season is actually upon us, right? So you may see stock prices start to move depending on how investors expect that company to perform. And this is why you're going to see a lot of profit taken after the report comes out or sometimes right before. I can think of a few companies now that this would have applied to for this earnings season, where you saw the prices go up 20, 30, 40%. Then the report came out and the price went down. This is why, right? So persons take profit usually before or right as the report comes out. So if you are an investor expecting the price to go up after the report comes out and it's favorable, you may need to look at maybe the last month of trading, and it's quite possible in some cases where you're going to see the price moving before that. Next, we have an opportunity to rebalance our portfolio. So you may find a company is not performing the way that you expect, or they perform the way you expect, and so your portfolio weighting may be out of whatever you're targeting. So it's an opportunity to rebalance. Now, if you have a longer term vision for that company, which of course is always a recommendation, then it may just be an opportunity to add more. So that rebalancing could mean adding more to your position, or it could mean taking profit and selling down your position. It really depends on what you're trying to accomplish. And then finally, it's an opportunity to test your thesis about the company. So it's a very good habit to be monitoring the reports of the companies in your portfolio. You certainly don't want to have a stock in your portfolio and not be checking the quarterly reports, checking the annual reports, the audited financials, looking at any news that comes out about the company. You know, if the company should have an earnings call hosted by L.E.A.R.N Grow Invest, you certainly want to check that out. All of that information helps you to validate whether or not you're on the right track with that company, or if you need to make any changes, right? So a lot of the times for me, if it is that I have a company on my watch list, then I'd be watching the report to see whether or not it should remain on my watch list or if I should move on. So it really depends on where I am with that particular stock and how things are looking, right? Sometimes a bad report is just a one-off. Sometimes it's a bad quarter. Sometimes it's a major expense that they've had to undertake, and so the report is showing a loss, but it doesn't mean that they're not going to continue to where they were before. So all these are things to look at as you consider the report itself. So to access these reports, you want to go to the Jamaica Stock Exchange, their instrument summary page. So what I have on the screen is the screenshot for Fesco. That's a company we did the earnings call for recently. So you have three types of reports that I had mentioned before. You have the quarterly financials, you have the annual reports, and you have the audited financials. So when you go to the instrument summary page, on the right-hand side, you'll have the ability to select the company that you're interested in. And then right below that menu, you'll say summary, price history, latest news, and then the quarterly financials. Of course, to have to go to the site to track news doesn't necessarily make sense. So this is where I'll plug our Telegram news feed. You have the opportunity to get news for all the companies on the stock exchange and business news all to one place. So if you're on Telegram, you can subscribe to our news feed and you'll have the opportunity to see when the reports come out and any news relating to that company. So this is a page that I would have clicked on for Fesco. I clicked on quarterly reports, and then I'm able to see their last three reports, right? So usually the quarterly reports are under one section. And then of course you're seeing here also the notice for their earnings call, because we would have had that with them as well. So on that page, you may see notices, and it's usually categorized. So you want to check news and under the reports for anything relevant for that company. When you click now to view or to download the report, there are some areas that you should expect to see in that report. So usually the company may choose to attach or include separately in an attachment the summary of their top 10 shareholders. Some may include an MD&A. Really, it's something that you should look forward to seeing, but I've noticed not every company does this. So an MD&A should be there, and that is really your commentary on the performance for that quarter. All right, next we have the financials themselves, and you're going to see it saying unaudited, and that's because usually once per year you'll get the audited financials, which will show, of course, those numbers would have been reviewed by an auditor, so they're typically more trustworthy than the unaudited financials. And then of course companies will show the three financial statements, and then of course the standings here, it's showing shareholdings for the directors and senior managers. So that's it for earnings season and earning reports. Hopefully that helps you to understand, what to look for in the report. Hopefully you know how to access the reports for the companies that you're invested in. And of course, if you have any questions, just let me know. All right. So let's start with our stock reviews now. So we're going to start with Spur Tree Spices, a company that has seen a 12.5% decrease in their share price over the last 12 months. So what you're seeing here is the chart, and this is a tool called Ticker. That's what I use for seeing just basic information about the stocks in my portfolio. If you're interested in Ticker, I've left a link in the description for you to be able to try out that tool as well. but that's what we're seeing here. And you notice it would have gone as high as about $3.30 in about December, and it has found its way back down to about 220, 230 there about right now. So there was some movement in the last quarter, but it's found its way back down. And of course, these are interesting patterns to look at. Typically, companies have a cycle for their stock prices, or they're usually, you see where there's one quarter that's known to be really good, and other activities that may be impacting the share price. So those are things to look out for. So for their most recent report, their Q4 ending December 2023, they saw 393 million in revenues for that quarter, 16.9 million in profit before tax. And of course, that's going to be the same because they're a junior market company. Earnings per share stands at 1 cent, and the stock price as at today is $2.37. In terms of their balance sheet or their financial position, they stand at 1.5 billion in assets, 414 billion in liabilities, and 955 million in equity. In terms of cash flow from operations, that's a positive 69 million, and cash flow from financing and investing activities, 54 million and 106 million respectively. In terms of the range of price for today, $2.33 to $2.49 for the last year. As I mentioned before, it found its way up to about $3.30, but it was as low as $1.91. So of course, what that means is that there are always opportunities on the market, right? When it found its way to $1.91, if you would have purchased at that point, you would actually be up significantly right now. Market cap stands at 3.97 billion, and the number of shares outstanding is 1.6 billion. Right, and you're seeing the numbers there at the bottom of the screen in terms of how it's been performing month to date, quarter to date, year to date. So it's down 21% for the year. And of course, we saw for the year to date rather, and what we saw is that the last 12 months, it's down about 12.5%. Right, so Spur it's an interesting company, I think. Lots to like about the company in terms of the direction that they were heading. They had an acquisition recently, and I think it's more about, in my opinion anyway, just not hearing enough from the company, I'd say. I thought that they were building some momentum, sentiment was strong. The financials were kind of building up to a certain point, and I think at this point maybe there are things that are happening that we're not aware of. I know they had their annual general meeting recently, so be sure to check that out if you want to learn more about the company. So they'll share their plans and their visions going forward, and so I think it's just a matter of just understanding their business model if this is a company you're interested in. And then of course, I personally would expect to see more of the same in terms of strategies for growth through inorganic means. I know it's a company that is building up its presence, usually very strong in terms of marketing and brand awareness. But I have noticed, again, that's not something that we're seeing a lot of lately. I don't know if it's just me and my social media. You can let me know what you think in the chat, but I'm just not seeing them in the same way right now. It could just be a seasonal thing. It could be that they're just preparing for what's to come. So what we want to do here, though, is go into the report itself and look at the MD&A to see if there's anything that we can pull from it in terms of what is to come. So I'm going to bring that up right now. Just give me 1 second here. All right, so we are looking at their Q4 report for 2023, though that's the same report that we gave highlights for just now. So I'm not going to go through the numbers because we'd have spoken about that before. But let's look at some of the things that they've mentioned or attributed to impacting their growth. All right, so it says, though there were several challenges, they achieved a commendable increase in consolidated revenue. The decline in its margin is primarily due to factors affecting the availability and prices of critical local inputs, such as seasoning and other things that they may need. So scallion, pepper, onion, thyme. So these raw materials are used in approximately 80% of their core products. So what this is telling you is that availability of these materials, shortages, or increase in price is going to impact their profitability. So this led to the inability to fulfill orders in some instances, resulting in a direct impact on revenue, right? So what this would tell me is that anything that relates to, again, the impact of these raw materials are things that I want to look out for. And then it says the prices of local fresh inputs have remained exceptionally high throughout the year, with no immediate signs of return to normalization. So that's going to be a big impact for them. And it says here, given the challenges experienced and the supply of critical raw materials throughout the year and the resulting impact on sales and gross margins, they've decided to enter a joint venture agreement to secure most of its raw material input needs. This will secure a stable supply of these raw materials at a reasonable and sustainable price. So they've made a move to try and mitigate that risk. So it says, with the general growth in sectors such as agro-processing, tourism, and others that depend on these raw inputs, it is management's view that the existing supply arrangement is woefully inadequate to meet its current and future needs. So it's saying what they were doing can't work, whether it is suppliers, whether it's systems or processes, something needed to change. So therefore, this investment is necessary to secure and grow their business, and notwithstanding, they remain committed, and so on and so forth, right? So it says in the coming quarter, they're set to launch an array of creative and innovative products, including our much anticipated line of dry spices. In tandem with these, they're expecting to roll out a comprehensive company-wide rebranding initiative. So that may explain why we haven't been seeing much from them, because maybe they're preparing for the rebrand. And the strategic overhaul of the look and feel of our new packaging will enhance the visual appeal and elevate the overall brand experience. So it says they're poised for a robust return to their growth targets. And yeah, okay, cool. So it's good that we got that context, and this is why you read the report, right? Because that tells you what they've been experiencing. It would have explained some of the things that I thought we were seeing in terms of the financials, and so that tells you what to expect, right? So if this is a company on your watch list, you want to wait to see the impact of their strategies to mitigate the risk that they're experiencing. And then of course you want to see if performance improves, and then of course with the marketing rebranding initiatives that may of course serve to drive revenue as well. All right, so we have just one more note for Spur. They had a dividend that was paid recently, so I wanted to go to that. So they paid a dividend of 0.015 cent, paid on January 26th, and they paid 25 million in dividends. So it was that dividend per share multiplied the number of shares outstanding. So they paid around 25 million. All right, the next company on our list to review is TransJamaican Highway. This company has seen a 139% increase in price over the last 12 months. A company that we've spoken about quite a bit on this channel, and I was really wondering whether or not we needed to do a review, but I did realize that we didn't actually go into the quarterly numbers, so it's worth going through here. So you've seen where maybe a year ago it'd be around the price of about 140, 150. I know we're looking at somewhere about $3.20. We'll get into the specifics in terms of price a little later, but that's what we're looking at, 139% increase over the last year. So in terms of revenues, this would be the revenues for their quarter. They do report in US dollars, and of course it's healthy revenues for the quarter. So 19.8 million USD revenues with profits of 6.39 million in net profits. Of course, their expenses, their operating expenses would have been somewhat improved over the previous year because they would have had a large expense in terms of the acquisition. And so, of course, moving forward, they would have seen some improvements. And when we met with the CEO, he mentioned that they were trying to implement strategies or implement technologies that would lead to a more efficient operation. And then, of course, they do, continue that drive to encourage users to use the tag system, which should help reduce their costs as well. So really, what we're seeing for the quarter is 5.8 million in operating expenses. Right, the EPS stands at 0.005, 3 zeros and a 5 in terms of EPS. That's just for the quarter. And the stock price today is $3.22. Now, TransJamaican does have a USD stock, and they have a preference share on the stock market. So you want to be mindful of what you're tracking if it is that you're interested in this company. So there's something to bear in mind. In terms of their assets, that's 290 million US in overall assets. Liabilities stand at 241 million, and that is something that we really want to watch to see how that continues to go down over time. And of course, equity stands at 48 million US. They have positive cash flow from operations of 41.7 million, and cash flow from investing activities stands at 17 million. And of course, for them, that would likely include things to either, whether it be maintenance of the highway, building out new highways or investing in infrastructure for that highway. And of course, financing activities like paying out of dividends and so on. That would be 22 million US from what we're seeing there. They would have had a market cap of 40.25 billion for the last year, as in 12 months, $1.35 to $3.30. So we've seen more than a 100% return from this company in terms of the share price in the last year. And then for the last quarter, we've seen 18.82% increase of the share price. Total shares outstanding is 12.5 billion. So a lot of shares outstanding, a lot of shareholders. I believe I heard somewhere about 15,000 shareholders. And of course, we know that NROC is their largest shareholder, and of course, this is one that has a lot of institutional investors just based on the sheer number of the number of shares outstanding. I was gonna say the sheer number of shares, right? They would have paid a dividend of 18.1866 cents. That was a $2.3 billion dividend. Now they are, I guess, evaluating plans to pay dividends twice per year. That's what we were told in the interview that we had with the managing director. Not confirmed yet, but they would normally pay a dividend sometime in October. So if they are planning to pay twice per year, we might see one earlier in the year. But if that doesn't get implemented, it will likely be again for October when we see another dividend being paid, usually announced sometime in September. All right, so let's check out. I don't believe there were any recent news for TransJamaican, so I'll just share my thoughts here. We are waiting for the Williams Field agreement to be confirmed. That's something that we haven't heard about as yet. We're looking to see, more of the same from TransJamaica. Simple business to understand, as I've said here before. It's really about a volume of traffic, things that can impact the company, natural disasters, repair of the roads, things like that, right? Natural disasters or forces of nature, sorry, that would impact their ability to generate revenue. But very simple business to understand. You really just have to see whether or not it's a company that you'd be personally interested in. Persons have shared concern about their debt. Of course, it's something that you'd expect to be paid out over time, meaning the question for some person may be why not pay down the debt instead of paying dividends and things of that nature. But the company was structured more or less to be a dividend paying company, and so you have to expect that that's something that they're going to prioritize, right? So unlike most companies that may seek to be more aggressive with debt reduction and lowering finance costs, etc., this is something that they would be prioritizing dividend payments simply because that's something that's a priority for the company. They would have also mentioned and wanting to increase that dividend yield over time, and this of course is going to be compared to their IPO price. So we saw that dividend yield increased for the last dividend payment, and so that's something that we're going to be tracking and see how they progress with that in terms of the next dividend, of course, compared to what the IPO price was. As it relates to the yield, of course, that would depend on the price that you buy at. And so, of course, just take note of that. All right. So all right. So let's continue. All right. Let me pause here and see if there are any comments to go through. Michael, you said that you bought more GTN. Since I'm not sure which one that is. Did you mean to say another company? I don't have a GTN on our local market. Let me know if that was a mistake. I'm wondering if you're talking about Wigton. But let me know. All right, so let us continue here. Okay. So okay. GTN is TV stations. All right, I'll have a look at that. I'm not familiar with that one. So let us move on to our third stock that we're going to review for this earnings season, and that's Wigton Windfarms. So it has seen, one second, please. All right, so apologies for that. Let me continue here. All right, so Wigton has seen a 47.9 increase over the last 12 months. So we have certainly seen a fair amount of volume in terms of trading activity over the last month, maybe about 2 months, right? So from about midway December, we're seeing the volumes would have picked up. So if you look to the bottom right of the screen, the volumes would have picked up, and that was when it was around, let's say, about 60 to 70 cents and it would have traded today upwards of about $1.25, right? So it has certainly grown in price over the last 2 or 3 months. And then of course volumes are increasing, price are increasing. So there's definitely something to note there. And we'll get into what we think that is a little bit later. So revenues for the quarter ending 9 months as at December 2023 is 1.49 billion. And that would be operating expenses of 496 million. And net profits stand at about, so I think my figures here may be incorrect because there's no way net profits is going to be more than profit before taxes. So let me just have a quick look at the report itself. That may be best so that I'm not sharing any incorrect information here. All right, so it says here that, let me zoom in. All right, so we see here where, so for Wigton, it's going to be important to note this metric of production and availability, right? That's going to be important to see. So in terms of production, we actually saw a reduction here to 96 million kilowatts per hour versus 117 million. So it's actually at almost an 18% reduction. And so that would, of course, impact the revenues that they have. So revenues for the quarter would have been 1.7 billion, and net profit, as I mentioned, 490 million. Okay, so that was correct. I just wasn't sure here. All right, so earnings per share is 0.045, and we see here the margins in terms of net and gross profit margin, right? So this would have been reduction from last year, and then of course, I'm sure they would have given some context on the performance. So let's see. So it mentions here the above mentioned decrease in production resulted in a 277 million or 15.6% year-over-year decline, right? So of course, the more they're able to produce, the more they're able to generate in revenue. So that's going to be a metric to look at. So let me see what else we have here. Talk about the stock price a little bit later. In terms of their assets, they stand at 10.3 billion, liabilities at 5.3 billion. Operating cash flow is positive at 483 million. And then cash flow from financing activities a negative 916 million. So we'll certainly dig a little bit deeper to see why that is. In terms of price range, as I mentioned before, we've been seeing the price move over the last 2 months. And so today's range would have been $1.05 so up to $1.25. So if you remember, the IPO was 50 cents. So certainly those who are holding from IPO would be very happy. Market cap stands at 12.76 billion, and the number of shares outstanding is 11 billion. All right, so over the last 12 months, it has been as low as 62 cents, as I would have mentioned before. Maybe about 2 to 3 months ago, it was 62 cents. And so, of course, it has grown quite a bit. So you're seeing 46.84% over the last quarter, year to date, month to date, it's up 26%. So for the month of February. And so, of course, Wigton shareholders are likely to be very happy right now. They did declare a dividend recently, paying out 64,900,000 in dividends, and that is to be paid on February 27th. So that would be a week from today, or a week from yesterday, rather, since this is the 21st. So let's look at a little bit more of the context into the report to see if we can get some idea as to where they're headed, right? So we're looking for outlook. So it says here, Wigton aims to sustain its current operations, implement new income-generating assets, and undertake new investments to diversify the company's revenues. I don't know why this sounds familiar to me. It sounds like something they may have said in previous reports. And enhance its portfolio of renewable energy sources in order to bolster the provision of affordable, reliable, and cleaner energy sources. So I will say here, well, I see saying it later on, but we do know when we had the conversation with the Innovative Energy Group, they highlighted their partnership with Wigton as something that they're looking forward to seeing fruit from. And it's saying it further on in the report. So let's look at what it says. So it says it is actively exploring business opportunities and forming partnerships to position itself as a broader energy solution provider. So the Wigton and IEC joint venture is one such strategic collaboration with the innovative energy company DBA IEC SPEI Limited, right? So the joint venture is currently completing its obligations under the agreement with the Ministry of Agriculture and Fisheries for the design, supply, and installation of a distributive solar photovoltaic system. Hopefully I said that right. And so it says this was recently used for the MBJ Airports Limited. And let me see what else it's saying here. It's a little bit hard to read this way, so let me see here. So I'm going to here now just the lower end of that paragraph. So it's saying they will continue to offer and undertake solutions in renewables, clean technology solutions, as well as pursue other investment opportunities to ensure to increase shareholder value. And the company is now in a position to submit its bid to the request for proposals issued on September 18, 2023 for the supply of 100 megawatts of renewable energy, right? I believe you would have seen that before. And it says here in relation to the phase one operations, it is noted that the current power exchange, the power interchange agreement with JPS for the sale of energy will expire in March 2024. I believe a notice came out today that was renewed. Let me find it here. And again, this is a very good plug for our newsfeed because I saw it come into our newsfeed as I was preparing for this session here today. So let me zoom in. So it says here, Wigton has advised that it has entered into an addendum to the power interchange agreement in respect to the phase one project. So it's going to be extended for another 3 years, right? So that's pretty much confirming what we saw in terms of that agreement. So the company continues its discussion. So we don't need to say that because that has been updated. Let's see if there's anything else for us to pull from it. So I believe that's it. Okay. So it says here, Wigton continues to align its capital allocation to its strategy. This includes making appropriate choices between increasing distributions to shareholders, investing in the business, and strengthening the balance sheet of the company. So the company is also cognizant of the special share held by the Accountant General of Jamaica and the attendant 10% shareholding limit on the 5th anniversary of the date of which the subscription list or the application list was opened in its initial public offer, right? Essentially, this may be the leading cause of the movement in price because, of course, the 5-year anniversary will be later on this year. Listed in 2019, we are in 2024, and so of course with that restriction removed, I think investors are bullish that there may be opportunities to get value in terms of returns as companies may seek to get a larger position in the company. All right, so in terms of Wigton, I'd say, well, I'd just say it's gonna be important to see how the company progresses in terms of performance I would say we do see with companies like Siboney, companies like Wigton, we've been kind of looking at the energy space for a while, right? So we are expecting to see just activity from those companies for this year. Also moves by the government to maybe engage these companies or use these companies for various projects. There are opportunities for these companies to take on projects that are maybe regional as well. So there are some opportunities for that space, and that's one of the things we spoke about in our stocks to watch earlier this year. So that's, I mean, it's more of the same for Wigton in my opinion. I do think that yeah, I'll hold off on saying anything else for now. I just wanted to of course review it, since I would have noticed the 49% increase in price, well, 47.9% increase, and thought it was worth at least mentioning as something that, if you're not aware, you know, what could have led to that that movement, right? So let me know if you have any questions. I'll get to them now. Otherwise, we can wrap up this episode. All right, so Michael, I see you saying as well that you bought FLWS, which made a profit of $1.27. Okay, cool. So Michael, I hope you're in our Telegram group and you can join our channel about the US markets. We talk about, I think the one that's being talked about a lot now is NVIDIA. Everybody's kind of excited about that one. As a finessing financing, Fesco doing great things. It was very interesting going through that earnings call. I think Fesco overall is going to be an interesting launch. I'm curious to see, because of course we know that RPL is on Spanish Town Road. Fesco is now going to be on Spanish Town Road, and I believe further down Spanish Town Road there are other gas stations as well. So it's an interesting space to see these two companies go for. And so I'm curious to see how things progress for them. In terms of RPL, we should see the Spanish Town location open Q1 of this year. And so we're waiting to see how those results are impacted based on that. And so a lot to look at in that space, and we're curious to see how things progress there. So that's it for our episode today. I do want to just take a word to mention our sponsor, which is the 12-month investment challenge by L.E.A.R.N Grow Invest. It's a great challenge for those who are new to investing or just want to invest within a community. And we have our next monthly call this Saturday. So you're welcome to join us. If you miss any of the months, all of the sessions are recorded and placed on our academy, so you can be sure to access them there. So if you want more information, please feel free to reach out to us on social media. So I want to thank you for watching this episode. I really do hope that you got great value from it. If you have any questions, let me know in the comments below. And we do resume our CEO interviews next week. I won't release the CEO that we'll be interviewing yet, but it should be an interesting one. If you have missed our previous episodes, be sure to check out the archive on our channel. There's a Market Money playlist, and we do stream to all platforms. So depending on the platform you're watching on, you should see it on all our LGI platforms. And so we hope that you've been getting great value from these episodes, and we hope to see you in the next one.